Hey guys, welcome back to another episode. Today, I want to take a closer look at your favorite semiconductor company, Intel. So, in the past few days, we have heard a lot of updates for Intel in their foundry business, and that's where I want to focus a lot in because, in my opinion, this is going to be Intel's biggest growth opportunity, especially the way the market is transforming right now. So, let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so if we take a closer look, right now, Intel is sitting at roughly $42.65. Unlike most other semiconductor companies, Intel is lagging for the year. Year to date, the stock is down roughly 10%. On a 52-week basis, the stock is up a nice amount and up roughly 50%. So Intel is doing, it's trying to do a lot of things at the same time. The two main things it's doing is first, it's improving its CPU solutions for both the data center and the consumer market to kind of battle the likes of AMD. The second thing it's doing really big is really focusing in the foundry business. And the foundry business, like I mentioned, is probably going to be one of its biggest growth opportunity in the futures if implemented correctly. And right now we are seeing that things are going pretty good. Now, the third thing Intel is doing is it is focusing in AI chips and GPUs, but that one I want to say compared to the other solutions right now is probably third in line in its overall kind of things to do. So that definitely has a growth opportunity, but the first two are the most important, and I do believe the biggest growth is the foundry business. So if we take a closer look, we have seen globally that every nation most big nations to some extent are trying to lose their dependency of chip manufacturing in Taiwan, and they're doing this by providing incentives in country to bring back manufacturing. And here in the United States, we are getting the CHIPS Act, and we did see on March 20th of 2024, Intel did get about $8.5 billion in direct funding under the CHIPS Act. And this is a good amount of chunk of money, right? But Intel is investing a lot of money here in the United States. They have roughly $100 billion investment planned in states like Arizona, like New Mexico, Ohio, and Oregon. And I'm going to take a closer look at all those individual states in a bit to kind of explain what Intel is doing within those states, right? Because it's not all about manufacturing. They're doing things like advanced packaging, like research and development. And I think it is important for investors to know what's the difference of each plant. The great thing, though, is the direct funding is one incentive that's coming from the CHIPS Act for Intel. There are two other things. First is the second thing is going to be some form of tax credit, and it does seem like Intel can also benefit of up to 25% in investment tax credit on more than $100 billion in qualified investments. So that's pretty amazing, right? A nice tax refund, a nice tax credit is great, especially when you're investing tons and tons of money. The second thing is they're also eligible for federal loans of up to $11 billion. And I'm going to have to guess when they're focused here on these CHIPS Act, on these semiconductor manufacturing loans, these loans are going to be much lower compared to anything else they can get into the market and might even have more incentives on ways to pay off. So overall, Intel, this is the best time for them to be pushing into the manufacturing business as hard as they can because of all the incentives. And remember, it's not just here in the United States, this is happening globally. Before we go any further, I just want to say thank you all for the amazing support we are getting in this channel. We're closing into 40,000 subs. That is insane. So if you haven't and you are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support this channel a little bit more, check out my special offer at fool.com/Jose. Now back to today's episode. Now, I did mention that I wanted to take a closer look at what each facility does around the United States. And the first one we're going to take a closer look at is Intel's Arizona plant. And this is what they call the Silicon Desert. And it's Intel's US manufacturing powerhouse since 1979. And Intel right now here is constructing two two big fabs here, the Fab 52 and Fab 62, to meet the growing demand for leading edge chips. And it does seem like right now Arizona has roughly four fabs for Intel in operations and the two fabs under construction for a total of six fabs producing more advanced logic chips than any other site in the United States. So this is going to be one of the biggest manufacturing sites here in the United States that is going to be focused on like their 18A nodes and kind of those advanced chips coming out from Intel. So this is a very big manufacturing plant. There is another manufacturing player out here in Ohio. So in Ohio, they are constructing two new leading chip fabs that will produce the most advanced semiconductor processors in the United States. So these are going to be the two bread and butters for the manufacturing of Intel here in the United States. Now, the third one is in New Mexico, and the one in New Mexico is pretty interesting. This one is mainly for high volume provider of advanced packaging. And for those that are familiar, advanced packaging is when you kind of put the chips together, and it's something that's really needed right now in forms of AI chips, or how we're going into this kind of chiplet design as maybe it doesn't make complete sense to just go smaller in chips. It's also probably better to stack them up and kind of package them together. That is what Intel is providing in New Mexico, and that's also an opportunity where they are seeing a nice amount of growth in the future. Now the final one is in Oregon, and this is their kind of brain, the research and development. So this is where Intel uses their overall engineers to really focus on the next generation of chips. For example, it's focusing on Intel 18A, on Intel 14A, and beyond. So this is the research and development facility for Intel, and they do have the world's first high NA EUV lithography tool there, which are obviously using for some of these advanced chip manufacturing process. So we can see Intel's really well diversified here in the United States in forms of manufacturing, the front end, on advanced packaging, which is usually the back end, on research and development, and just high volume production as well. So if we start to get into this world where chips need to be made inland for national security reason, especially because of AI and the future of AI and what AI could do if it's gotten on the wrong hands, Intel definitely seems like a winner, especially with all these tax incentives, with all these loan incentives, which the direct incentives that Intel has received from the United States government. And there are reports and rumors that we might be getting a CHIPS Act too, because at the end of the day, we need more money here, and Intel can probably be another great winner here. In total, across wafer and advanced packaging, Intel expects lifetime deal value is greater than $15 billion right now. And Microsoft was one of the customers that announced that they have chosen Intel for their 18A manufacturing. So overall, things are moving in the right direction. And if for some reason there is a slowdown in CPUs or other markets, this could be the kind of solution that Intel needed to keep it running and keep it very relevant in this AI space. Now, I just want to take a closer look at PE ratios for Intel. Current PE ratio is 110. It definitely looks pretty expensive. But when we're looking at semiconductor companies, I personally believe it's better to look at those forward values. Forward, which is the next 9 months where we're at right now, is sitting at 31.87. Not that crazy expensive, in my opinion, for the next 9 months. Now, if we look forward 1 year, which is the end of the next fiscal year, so right now we are in quarter 1, so it's about seven quarters from now, so about a year and 9 months. The forward PE ratio for then is 18.61. If in my opinion, if Intel really does and destroy this manufacturing phase that it's doing and becomes a strong winner, a PE ratio of 18.61 does not seem that crazy, especially as we are moving in this world and they continue to get more incentives overall globally as more countries want to have manufacturing done inland. So let me know what you guys think on the comments below. Take care, have a good day, and see you next time.